Hey, good morning, and welcome to Monday Morning Matters with me, Kalu Aja. This is our early morning show that we do Mondays, 7 a.m. to get you all set up for the week ahead, right? That's what we do here. So it's like a short, what's a short 30-minute session, talk about the key topics for the week that you're going to meet during the week. That we are all set for the week coming up, right? That's what we want to do here. So, quick one. Just the key topics that come to mind this morning, and then we'll just take it from there, right? So let's start off again. Remember, we're on YouTube as well. So if you want to follow on YouTube, you can. And if you want to follow us on Twitter, of course, you can. I'm going to share the slides as we go along. So lots of topics I want to just get into today. Let me just get this all set up for you guys. Delete. Perfect. So let's go back to, I'm going to share this. Yeah. So I want to talk about the currency Naira, right? Want to talk about the Naira currency. I want to talk about the president's new mandate for the NNPC to go back to what we had pre the Petroleum Industry Act, where all funds or all revenues flow directly to the what's it called, the Consolidated Revenue Fund. I want to talk a lot about that today. But let's start off with the what we do our overview of the where are we right now. That's what I want to talk about right now. I have my indicators up. We do this every week. We talk about the crude oil production, capital importation, foreign direct investment, and of course the debt. We choose this slide. ProShare. ProShare does a great job to give this to us every week. If you don't follow ProShare, you should. It's a great way just to see what's happening in Nigeria. And this, to me, are the key indices that Nigerians should track. Do you want to know what's happening in the economy? You want to track these indices because Nigeria, the Naira, the economy is tied to crude oil production, and crude oil exports. So if you are able to understand what we are pumping out, that guides you in knowing where the Naira will go to and even where the GDP is also going to go to. So it's a good slide. It's a good slide for you to watch every site in Nigeria. But this question is up. I would say it's up. We're about 1.6 million barrels per day. Remember, the OPEC quota is about 1.5. So we are just meeting that OPEC quota. But the budget for 2026 is about 1.7. So again, we are just at the budget. It's about total crude oil production about 1.63. So we've gone up a bit, right? But this is really, really low when you compare the historical numbers that Nigeria had. Nigeria was doing about 2 million barrels a day in 2005, 2006, right? Now we're about 1.63. So even though we are more than OPEC, we are still below even the budget numbers for 1.7 for 2026. The implication of this is, of course, if we do not get oil output up, then we have to borrow to fund the gap because when we sell crude oil, we fund our budget. If we can't fund our budget by exporting more crude oil, then of course we have to borrow. That's the problem with this. What about capital importation? It's gone up, so that's good news. We're at about 5.12 billion last quarter. Right now, we're at about 1.6, about 6 billion this quarter if you compare quarter on quarter. So capital importation has gone up. That means that we are bringing in more foreign capital into Nigeria. The problem is that the money is not really going towards, we say, the industries, the manufacturing that needed. We're going to get to that later on. But the money is coming in. It's coming in towards the banks, towards the financing and all that, but it's not going towards the real sector of the economy. That's one negative we might say. But overall, money coming in is better than money not coming in at all, right? So we will take that as a win and say, yes, Nigeria's attracting capital. Even if those funds are not going towards the productive sector, it's still a win in the short term. So fantastic. What about the total debt? Total external debt also has gone up by from 70 trillion to about 71 trillion. So we're borrowing more in Nigeria in foreign currency. We are borrowing more because we have to fund our budgets as well. And also domestic debt has also gone up about 78 trillion to 80 trillion. Remember this year, we plan to borrow about 2 trillion a month, 2 trillion every month. And that's based on just us selling 1.7 million barrels a day at about $64 per barrel. So it's a long shot there. We have to really produce a lot to sell, and of course, to then make money stand to fund our budget. So that's the picture for Nigeria this week, right? Let's go into the Naira. I want to really talk about the Naira because lots of folks are talking about the Naira. But before then, like I told you about this this money that's coming to Nigeria, there's a nice report here from the Punch. Foreign investment to Nigeria in the first 9 months of 2025 that is going to the manufacturing sector, it fell by 54%. So the total capital coming to Nigeria went up by 131%, but the volume going to manufacturing is down 54%. So you can see what's going on. Nigeria is attracting foreign portfolio investment. I think we brought about 4.85 billion, right? So 80% of the funds coming to Nigeria are foreign portfolio investment. But that one, like I said, is not going to the productive part of the economy. It's going to the banks. It's going to financing. It's not going to manufacturing. So manufacturing saw a 54% fall, but the other sectors, the whole economy attracted about 131% surge in overall capital importation. So it's a bit of a worry there that this money is coming in, is what we call hot money. Funds are coming in, but they are short-term funds, right? So this money is coming in. We don't know how long they will stay. They will stay as long as rates are high. So if rates start to falter, the money might go away. You know, if you buy a factory, you just can't take a factory and go away. But if you're buying bonds, you're buying shares and all that, you can easily sell and leave. So it's also worried that to Nigeria, that Nigeria is attracting capital, but it's not attracting that long-term capital. So which leads us to the question I want to ask, right? Is do you guys think that the Naira strength, because the Naira has gained strength. We've talked about the Naira strength I think for the last 3 episodes of this show. The Naira has gained strength throughout, I would say, the month of February, and it's still growing strength. But is this Naira strength as a result of the Naira exporting and getting dollars into the economy, or is it because the Central Bank of Nigeria is funding our BDCs with about $150,000 every week? So if you're not aware, the Central Bank of Nigeria has allowed the Bureau de Change in Nigeria to basically come into the official market, and they are funding them with $150,000 every week. What that means is there's supply in the market. Before the CBN did this BDC buying of dollars, right, there was a lot of pressure on the official market, which then led to pressure in the parallel market, what we call the black market. If you want dollars in the official market, you don't get it, you go to the parallel market. So there's a pressure in the market and Naira was falling. CBN has come in, is funding the market, so the market has seen a lot of dollars. That's why the Naira is gaining strength, right? Because there's a lot of dollars now flowing from the CBN to the BDCs, which are then meeting demands for dollars. So whatever you supply, the price goes down. So because CBN is supplying dollars, the price has gone down. So the question is, if you take away the CBN supply, can the Naira stand on its own? That's the question we have to ask. Can the Naira survive on its own without the CBNs intervening in the market? Because remember, we have an open market now. We have no peg, which means that from the exports from CBN, from the diaspora, from the remittances, we are supposed to then get dollars into the economy that will support the currency. If we don't get that, then we might have to ask questions. So again, we don't know yet because we've talked about the portfolio investment. It's coming into Nigeria, but it's not going to the manufacturing. But money is coming in. The remittances are up. Foreign portfolio investments are up. But foreign direct investments is flat and going down. and we have the CBN funding the market with $150,000 every week. So that's why the naira is gaining strength. So again, if the CBN stops funding this market, what happens to the naira? That's the question we want to ask. I'm not sure we can answer that today, but just giving you guys again insight into what's happening in the economy, so that way you're able better to react and to know what's going on, right? Okay, again, let's talk now about the Nigerian stock market. We've talked about Nigerian money market. Let's talk about Nigerian stock market. It's been on a boom. The Nigerian stock market has been on gangbusters recently, right? Many reasons why. There was a circular by the National Pension Commission that allowed the PFAs, the pension fund administrators, to increase the level of equities that PFAs can buy. The PFAs are the largest single source of long-term capital in Nigeria. I think they're worth about 12 trillion. This is assets for pensioners and for working folks that are still working and have years to retire. The largest source of long-term capital in Nigeria is with the pension fund administrators. And now their PENCOM, the regulator, has said, you guys can invest more in stocks. Because they can invest more in stock, it has driven a rally in the stocks that PENCOM can buy. PENCOM usually PFAs can buy, PFAs will only buy stocks that have paid dividends for 3 out of 5 years. And that's what you see happening in the market, not just the PENCOM stocks, but because stocks are going up in general, then you then see the whole market reacting and the prices going up. Literally, and I hope you guys, if you want to see the visuals on Twitter, I'm sharing the visuals as I speak. So if you want to see what I'm talking about, if you go on Twitter, you see all the visuals. Also on YouTube, you see the visuals as well of what I'm talking about. If you look at the index, like this, I'm sharing the weekly report from the Nigerian stock exchange. If you look at the numbers, these are great numbers. For the year to date, the Nigerian stock market has done about 25% year to date. This is just February. And this is, so we are beating the US market. I think we're beating nearly all markets in the world right now. Nigeria, the stock market, we're doing about 25% right now. If you go sector by sector, almost every sector, oil and gas, industrial, banking, insurance, almost every sector is doing double-digit returns. The only sector, like not even a sector, the only sector I saw or the index I see that's not doing as well month to date is the growth index. And again, I think it's because PFAs can't buy those stocks that have not paid dividends. And maybe most of those growth index stocks are new, have not paid dividends, so PFAs can't buy them. But if you just look at the market as a whole, every sector, every index is doing well. The whole index as a whole, the Nigerian All Share Index, about 25%. The premium index, about 40%. Insurance, 15%. The oil and gas sector, about 52%. Ethical sector, the guys that don't buy banks, are also doing about 43%. You're talking about Lotus, the sector. So the market is doing very, very well. So that's one good news out of Nigeria, that if you're investing in the stock market, you are doing very, very well in terms of your return on capital. So that's great news there. This week, we're going to have what we call the Monetary Policy Committee meeting by the Central Bank of Nigeria. I think it's actually going to be today. So today, the CBN is going to meet. They call it the Monetary Policy Committee. What they do at that meeting is to say if they're going to raise interest rates or if they are going to keep interest rates fixed. What does this mean, really? If you look at the economy, how the central bank fights inflation is by raising and reducing interest rates. So right now, we've seen inflation in Nigeria fall from about 30% all the way to about 15% today. How has the CBN made this happen? It has made the cost of borrowing very, very expensive. So it has kept what we call the monetary policy rate, the MPR, very, very high. Because the cost of borrowing is high, it reduces the velocity and flow of naira in the economy, and that helps to bring down inflation. I would add this: inflation in Nigeria is not really driven only by monetary pressure, it's driven by the lack of supply. Nigeria has a supply issue whereby we don't have enough rice in the market, so the price of rice goes up. It's not because interest rates are up or down that the price of rice is expensive. Rice price is expensive because we don't make enough rice, so we have to import rice. Food is a big factor to inflation. Food drives inflation in Nigeria. So if there's food, inflation falls. So what we are seeing this week is that the MPC is going to meet and I'm going to say, well, let's look at inflation. Has it gone up? Has it come down? If it has come down, then the CBN has got to reduce interest rates to come to show that the inflation coming down is real and that they want and more SMEs to then borrow money. I doubt they would go far in that. They might reduce the rates by maybe 1 basis point with like a percentage point, that kind of stuff. Why are they keeping rates high? Go back to our discussion on naira value. The naira value has been up, right? Because CBN is supplying dollars. Where is CBN getting the dollars from? From the foreign portfolio investments. Why are the foreign portfolio investments coming to Nigeria? Because if you buy Nigerian bonds, the CBN pays you very, very high rates. So when the rates are high, it attracts investors to put money in fixed income. If the CBN reduces those rates because inflation has gone down, then most of that money might go back because people will say, why take the risk in Nigeria if rates are going to fall? We're not there yet. We're not there yet. I don't see the CBN dropping rates by 5 points. I don't see that happening. But giving you the interplay of what's happening in Nigeria between the monetary policy rates, foreign portfolio investments, and the naira value, they are all tied together. The CBN can wake up tomorrow and say interest rates are 15%, which means the SMEs would borrow cheaper. But if it does that, the foreign portfolio investment are going to leave. Or the CBN can say, we're going to keep rates high, the SMEs don't get enough capital, but we get foreign portfolio investments coming in. So you see, it's always a trade-off. You can't eat your cake and have it. If you want cheaper credit, you might jeopardize foreign portfolio investments. If you get foreign portfolio investments, you jeopardize cheaper credits for your SME. So that's good. That's the conundrum the CBN is going to face. That's why they are meeting. They're going to get all the eggheads there, the smarter folks. They're going to sit down and say, hey, what can we do? Should we increase rates? Should we reduce rates? And that's going to be a key thing for you to watch out for. If they reduce rates in the fixed income market, then the stock market is going to do a lot better because people are going to say, wow, why am I still in the fixed income market? If stocks are doing 25% on an index basis, let me go to the stock market. If they keep rates high, folks are going to say, why should I take risk in the stock market? Let me come and get interest-free, risk-free returns from federal government bonds. So again, that's the interplay we're going to have between the stock market and, of course, the NPR. So, guys, again, once we finish, if you guys have a few questions, we can take a few questions before we go. I think I have two topics that we just round up. I want to get to the presidential order to safeguard Federation oil and gas revenues. Let me explain to you what's going on. We have in the Constitution a clause that says that any money that is raised in Nigeria that is owned by the federal government or the federation must be paid into a federation account. We have that clause in the Constitution. So once we have tax revenues, those are owned by the federation. We have to pay them to the federation account. When we passed PIB, the PIA, right, what we did was that we said the NNPC would have a fund called the Frontier Fund. What is Frontier? Frontier means those oil blocks outside Niger Delta. Because investors don't really like those oil fields, they don't think there's oil in those oil fields. They don't invest in those oil fields. So the CBN, the NNPC is basically putting money up to say, if you want to explore for oil in the frontier oil, maybe in Gongola, in Plateau, in Bauchi, we have some funds here as seed. That's just paraphrasing. So that was in the PIA. Also, the NNPC gets about 30% management fee also for the PI, which they also get. So in that sense, when the NNPC sells crude oil, it will deduct that revenue, pay itself, then send the balance to the federation account. But this is in the PIA, the Petroleum Industry Act. What President Tinubu has done is to say, no, don't do that. Follow the Constitution. If you sell oil, pay 100% to the Federal Reserve. Follow the Constitution first. Don't deduct anything. That's what he has done. Is he right? Of course he's right. It's in the Constitution. we should not deduct funds to even pay for stuff. So you want to ask yourself the question, why was it that the Petroleum Industry Act in the first place? If we knew that we didn't change the constitution, why did we put that law in the Petroleum Industry Act? That's number one. And number two, if the president is right, has he gone about it the right way? That's where I think he's wrong because he's using an executive order 9. That's what he's doing to change this practice. I think it's a bit wrong to do it this way. I think he should have gone to the House and passed a bill, amendment to the PIA Act to change this what's going on and then to have it all streamlined. Because if you use executive order to effect an act, when Mr. Tinubu goes, the next president can come and say, I'm going to use EO and stop the tax reform bill, or use the same EO and put this back into the law. So EOs are just executive, they're not bills, they're not acts of parliament. So I think the president is right, but I would hope that he would sort of change this and use the right way. Because I mean, they boast that they have the largest party in Africa, the governors, the Senate, and all that. So since you have that political power, use it and change this law. I think he's right to make all the funds go to this Federal Reserve. That would be more money for the state and local governments and less monies for NNPC to play with. NNPC is a limited liability company. They should not have these funds debited first source going to them. That should cut off. So I think Brent is right, but I think the way he's doing it, in my view, is wrong, right? Okay, then the last thing we're going to talk about today is going to be the war with Iran or the war or the rumors of war that we see going on in the world with Iran and the US. Why are we making this a point of duty? If the shooting starts in the Middle East, it changes everything we're talking about. Suddenly, Nigerian bonds, Nigerian equities, the naira, the dollar, everything is going to change. It's going to affect the returns. It's going to affect our budget. It's going to affect your pocket. Everything will change. So we have to keep an eye on what's happening in the Middle East today. If you look at oil, before we had this tension, crude oil was going down to 60, below 60. Now it's up and it's going up because if the war starts, it's going to affect where we have the bulk of the oil in the world coming from. So we have to keep an eye out there to see what will happen. Like I've advised folks before, you have to ask yourself the question, what will happen to your portfolio if crude oil goes to $100 a barrel? It might be good, it might be bad, but you want to do a scenario plan and ask yourself, what will happen if crude oil goes to $100 a barrel? Is it going to be good for Nigeria? Yes. Is it going to be bad for Nigeria? Yes. So 2 yeses. Why is it good for Nigeria? Because the NNPC, the JV partners are going to make more money. So per crude oil barrel that we sell, we're going to make excess profit on the little crude oil that we're buying. So that's good, number one. Why is it bad for Nigeria? Because we import crude oil. Yes, Nigeria imports crude oil for Dangote refinery. Nigeria also imports PMS. So the cost of crude oil, the cost of PMS is going to go up, and it's going to be very, very bad for the Nigerian economy because we're going to get the monies from crude oil and turn around and then pay that money to the guys that are basically importing crude oil and gas. So that's not a good thing for the economy. But you're going to ask yourself that question, what happens to my portfolio if the oil price goes to $100 a barrel? Find out and then basically work and amend your portfolio as you deem fit, right? As you deem fit. Ask your banker to tell you what to do. Guys, we've come to the end of this particular session. Got a few questions here, but yeah, on Twitter, we're going to take them. No one wants to speak, that's fine. It's going to be we have about 6 minutes more to go. Let you guys go on your way, drive to work safely. Quick question, what's your take on the Naira? I had you ask about the Naira. What's your take? What will the Naira be 6 months from today? The Naira is a derivative, in my view, this is my view. The Naira is a derivative of the Brent crude. Naira is a derivative of Brent crude, which means that if Brent crude goes up in price and Nigeria exports more crude oil, the Naira gains value. That's my view because we sell more oil, we get more dollars, we can fund imports, and we can intervene in the Naira. So if we are able to sell more oil, then Nigeria, the Naira is going to be more stronger and more stable. That's what's going to happen. So the question is, what do you think will happen to Nigeria's oil output? If it's up, Naira will gain value. If it goes down, the Naira will lose value. Remember that also, I think I shared a report on the week. The US wants a weak dollar. The US current government wants a weaker dollar because they want to boost exports because of tariffs. So again, most of the dollars, the Naira strength we're seeing is because the US is deliberately weakening the dollar. Still, you can see our Naira is still weak. So we have a weak dollar and our Naira is still weak because remember, the Naira strength is coming from that intervention by the CBN, $150,000 every week. If we stop doing that, what will happen to the dollar? Who can answer that? Nobody knows. But again, I will say we're not there yet. We're not there yet. So I hope I answered your question. To the second person, yes, I agree with you. The present is that you're saying that the EO has not amended the act. The EO is just an administrative time. I hear what you're saying, that the president has used the EO to buy time to amend. I hear you. Somebody can do the same thing. Somebody can come and say, I amend the tax reform, stop cutting taxes while you amend. You are setting a bad precedent. You are saying that you can use EOs to change the constitution. So he should have done two of them and announced that he's doing two of them. So it looks to everyone can see that, listen, yes, this is a problem and he wants to fix it, but the EO is maybe for, I don't know, 1 week or 3 months whilst the committee gets to do the work. Let's not have things done haphazardly. It's in the constitution. He can get sued, and you are dealing with foreign oil companies again. You are dealing with foreign oil companies because it's a JV arrangement with NNPC and the foreigner. So don't open yourself up to any legal dispute. It's in the constitution. This is a past law. Nigeria is still in court because of the Mambila Dam. We're still in court over that because the court says, well, you approved something and I took a decision, you can't come back and change it, right? So last one from Joshua. The dollar, if the dollar is weak, is the pounds and euros also weak because Naira is also appreciating? Yes. Remember, currencies trade in pairs. Currencies trade in pairs. If the dollar is weak, what happens to the pound and the euro in relation to the Naira? They will also fall. Why? Because if they don't fall, there will be an arbitrage. I would simply use Naira and buy pounds, then and buy dollar, then buy pounds. So the market would adjust for that arbitrage by reducing the value of the pounds as well. If you go online and you just ask yourself, have major currencies fallen? They'll tell you yes. All the US dollar has weakened against major currencies all across the world. I'm looking at February 22nd. The dollar is falling because the US government believes that a weaker dollar would allow them to do tariffs without tariff, which means that American goods become cheaper than Chinese goods, which means that more Americans would buy made in America products. So it's a deliberate fact. So again, go online yourself, just look at the relation of the you have it weakening internationally and gaining in Nigeria. If that happens, scalpers will come to Nigeria, buy up the dollars in Nigeria, and then go and sell for one to come down. Hope that answers your question. All right, fantastic, guys. It's been a great session with you guys on the 23rd February. Thanks for tuning in. It's a very, very short 30-minute session. I think we've gotten through most of our slides. I'll let you guys go drive to work safely and enjoy your week. And I will see you guys next Sunday when we are here again, 7 p.m. on Sunday, West African time, where we're talking, of course, money, the economy, and finance. Again, my name is Kalu Aja. Thanks for listening, and I'll see you guys some other time next week. Have a good one. Next week I travel to Houston, so we might not meet, but let's keep that on the cold temperature. Yeah, I'll see you guys. Take care of yourselves, and bye.